Did you know that over 80% of beginner traders lose money in their first year? It's a tough statistic, but it's the reality for most people who jump into the markets without a plan or proper guidance. Picture this. You open your trading app, see a sea of red, and wonder where you went wrong. But what if you could change that story? Want to flip the odds in your favor with a proven strategy designed for 2025? Imagine trading with confidence, knowing you have a clear roadmap to follow, even when the markets get wild. Today, I'll walk you through not just the theory, but real-life scenarios and practical examples that you can use right away. Let's break down the best trading strategies for beginners, step by step. Whether you're just starting out or looking to sharpen your skills, these principles and examples will set you up for success. Here's the reality. High inflation is squeezing wallets. Prices are rising everywhere, from groceries to gas, and it's making every dollar count. For traders, this means the markets are more sensitive to economic news than ever. Job security feels shaky. Companies are tightening budgets, and layoffs are making headlines more often than ever. Many people are turning to trading as a side hustle or even a new career. Interest rates are at decade highs. Borrowing is more expensive, and that impacts everything from mortgages to business loans. As a trader, you need to understand how these changes ripple through the markets. Market volatility is spiking, price swings are bigger, and uncertainty is everywhere, making it both risky and full of potential. This is where opportunity lives for prepared traders, and the cost of living just keeps climbing. Every month, it feels like your paycheck stretches a little less. Trading can be a way to supplement your income, if you do it right. For new traders, the pressure's on, but so is the opportunity. If you can learn to navigate these conditions, you can thrive when others struggle. Let's see how this works in practice. Let's talk strategies. I want to introduce you to the break and retest strategy. This approach is a favorite among pros and is perfect for beginners because it's logical, visual, and repeatable. It's simple, effective, and works across stocks, forex, and crypto. No matter what you trade, this method gives you a clear edge. Let's walk through a realistic scenario. Here's how it works, step by step. Follow along and take notes because mastering these steps can change your trading game. Step 1. Identify key support and resistance. These are the price levels where the market has repeatedly reversed or stalled. For example, let's say you're looking at a tech stock that's bounced off $50 3 times in the past month. That's your support. On your chart, look for price levels where the asset has bounced up or down several times. These are clues to where buyers and sellers are most active. Mark them clearly, they'll guide your trades. These are your zones. Think of support as a floor and resistance as a ceiling. Price bounces off these levels until something big changes. The more times price reacts at these levels, the stronger they are. Strong zones attract more attention from traders. Here's a practical example. In 2024, Apple stock bounced off $150 5 times before finally breaking out. That's a strong support. Step 2, wait for a breakout. This is where patience is your best friend. Let's say you see price approaching resistance at $100. Most beginners get excited and jump in early. Patience here pays off. Most failed trades happen because people rush in too soon. Don't jump in at the first sign of movement. Wait for confirmation. A real breakout happens when price pushes through support or resistance with strong momentum, usually shown by a big candle closing beyond the level. This is your signal that the market is ready to move. For example, in 2023, Tesla broke through $200 resistance with a huge green candle, clear confirmation. Step 3, the retest. This is the secret sauce that filters out false breakouts. After breaking out, price often returns to test the old level. This is your chance to enter with less risk. Here's a real scenario. In 2022, Microsoft broke above $300, then pulled back to $300 before rallying to $340. The patient traders who waited for the retest got the best entry. If resistance breaks, it becomes new support. The market is telling you the old ceiling is now the floor. If support breaks, it becomes new resistance. The roles reverse and you adjust your plan. Wait for price to come back and reject that level. A bullish engulfing candle or pin bar is your green light to enter. Confirmation is key. In 2023, a forex pair broke support, retested, and formed a bearish pin bar. Perfect entry for a short trade. Step 4, set your stop loss and take profit. This is your safety net and your reward plan. Always protect your capital. Never risk more than you can afford to lose on a single trade. For buys, stop loss goes below the new support. For sells, it goes above the new resistance. Always know your exit before you enter. For example, If you're buying at $100 after a breakout, set your stop loss at $98 and your target at $105. For your profit target, aim for the next key support or resistance level. This keeps your trades realistic and disciplined. Many traders take partial profits at the first target, letting the rest ride if the trend continues. This way, you lock in gains and still have upside. Step 5. Risk management and psychology. This is the foundation of long-term trading success. This is what separates winners from losers. The best traders manage risk and learn from every trade, win or lose. Never risk more than 1 or 2% per trade. This keeps you in the game, even after a losing streak. Avoid overtrading. Focus on quality, not quantity. One good trade is better than 10 random ones. Stay patient, stick to your plan, and don't let emotion take over. Emotional trading is the fastest way to lose money. Here's a practical tip. After every trade, write down what went right and what you'd do differently next time. Let's look at real examples. Seeing these strategies in action will help you understand how to apply them in your own trades. In the USA 2022, a major stock hit resistance at $100, broke out, then retested at $100 before rallying to $120. This classic move rewarded those who waited for the retest. Imagine you bought at the retest and set your stop loss just below $100. Your risk was small and your reward was big. In Europe, 2023, a forex pair broke long-term support, retested, and dropped sharply. Classic retest move. The patient traders caught the big move. If you had entered after the retest, you could have ridden the trend down for a strong profit.